Hey traders, what's up? Jamie Saettele here, SB Trade Desk. Wanted to do a quick video on Euro. So these are weekly charts. This is over at the long-term page, but as we get into FOMC tomorrow, um, the really big spot on this chart to me at this point, now that we've kind of consolidated, right? Following the gap after the first round of the French elections, um, like nothing's happened. Right, the market has gone sideways in a very, 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 very tight range. And I'm looking towards this is the log scale chart, but you come to the same conclusion as the linear or arithmetic scale. That is the 111.15 to 111.50 area is really big. All right. Almost like when I see an area like this, I almost call it like a magnet, like you're going to get there. It's just a matter of how. So that's where I'm looking. And this is the scrolling back. This is the log scale. It could be something really bullish, but this is the log scale. And then arithmetic scale, right? We've got the median line that we've known about for a long time. It's been resistance on every rally since 2015, starting with the yuan revaluation China crash. All right, on every weekly basis. All right, we traded above it actually last May, like a year ago exactly. This is right when we peaked last year. Again, the bullish dollar seasonals. Okay, and it was resistance literally to the tick on every test since then, including the election. And that median line is right about 111.15 or so. So that's where I'm looking. Now, near term, this is the slope we've been following, and I've been kind of holding out. We tried along last week. I mean, I guess you'd still be in it if I didn't get out because the stop would have never been hit. Stop was 108.30, but I just don't like sitting in a trade that's doing jack. And I actually have some stuff written about that in the post today. But this tight consolidation, more often than not, when you see something like this, it's a triangle. So the slope that we're looking at, this seems the more precise one to me. Okay, and that's up at 110, a little above 110, and there's the 111 median line up here. Okay, if you draw it from this low in January, you actually would be consolidating above it right now, which is actually really bullish, and that would meet 111 towards the middle of the month. Just a thought. I still think that this is the better one to look at, but what about something that's totally objective and not at the whims of, me deciding which low to use for the trend line? For this, we can bring in, of course, our chart of futures with volume on it. And recall that you did have a high volume day on last Monday, so the 24th of April. That close is 108.66 on spot, and it has held every single test. That's pretty important. All right, it tells me that there's a good level here and that you can actually just be bullish with stops under here. Okay, which is pretty tight at this point. And then if I go to, excuse me, if I go to a really short-term chart, you can count a triangle within here from the top last week. A, B, C, D, E. Now throughout the day today, I was thinking, C or D or whatever. I was thinking C, sorry, would get lower, closer to 108.75 because it's such a good level. Hasn't happened. So my plan at this point is literally to just put an order at 109.02. You can see that today's low, right at the fix, the European fix is, or the close, sorry, is 109.01. So that's why I would want an entry essentially at that level. I'd be looking at it as support. All right. I still would be, I still think you might be able to get 108.75. Some, these consolidations do have a way of kind of morphing, if you will. But here's one reason why I don't want to be too picky. Remember the charts from before the election, the French first round election, when we were looking at the German 10-year, U.S. 10-year spread. Well, look what happened today. That spread opened up on a high and closed on the low. Okay, around median line stuff too. This to me is bearish. And remember, our big level on the spread was like 197 or so. Tested it so many times. We're actually right at it again. And again, as the spread goes lower, so goes euro higher, right? So not a coincidence. The spread started coming off as U.S. yields started coming off in the middle of the day, and the euro kind of firmed up a little bit. So, that's my thing there. I kind of want to be err on the side of of longs, and look, if it stops out, then you might be able to get a better entry near 108.15 in euro. 108.15 in euro is the chart that we're looking over here. All right, this is the hourly chart, but that would be down here. Okay, the median line as we have it drawn now. But in the meantime, fine to be bullish above the range lows from last week, which is 108.50, even heading into FOMC. All right, so I wanted to just show you and share my thoughts on euro, especially that U.S. 10-year, German 10-year spread, and then of course the volume chart too, which has 108.66. It's kind of a line in the sand. All right. Okay, so that's it. Again, thanks traders, and good luck. Bye.